Today's real estate market can be tricky. Want to buy or sell a house, finance or insure a house, or stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DePola and Johnny C. live on Real Radio.
Good Saturday morning. Welcome to another edition. It's Florida Talk Real Estate. We got you for the next 2 hours of infotainment, and thank you for being there. I see you, 92.1, 101.7. And when I say see, you know what I mean. I just know you're there. I can feel you. Is that better? I feel you, 92.1 and 101.7. Yeah. What's up? Thanks for being there. Of course, if you have your free download, your iHeartRadio app, we are worldwide. That's right. Try it out from wherever you're at. See how that goes. And of course, the cameras are set up for a reason in the studio. That's because we live stream on a Saturday. You're welcome to join us. If you're there already, thank you. If you're not, you can on Facebook. Florida Talk Real Estate on Facebook. Florida Talk Real Estate LLC on YouTube. That is a home of a ton of informational chunk videos and a live stream on Saturdays. Go ahead and check that out. Of course, if you'd like to be a part of the program, you're more than welcome. Toll free at 877-927-6969. If you choose to join in, questions, comments, concerns in the world of real estate, want to bring a topic or a question to the table, the first voice you'll hear, the melodious tones of our producer extraordinaire. There's Jimothy, my brother from another mother.
Hello, and good morning, Johnny. How are you today, bud?
I'm good, man. Always good to see you. Happy Saturday.
Happy Saturday.
Pleasure. Johnny is me. I'm your old buddy, your old pal, Johnny C. Your air traffic control. Let's go ahead and get the very important people on a Saturday. The starting lineup consists of Mike Rao. There he is, the mortgage guy from the mortgage firm. Good morning.
Guten Tag. Good morning.
Good morning. Right. Guten Tag is good morning in German?
Yeah, that's right.
Very nice.
Mm-hmm. Got such a good ear. Wow.
It was a lucky guess. Yeah. It felt right. I felt good about it.
Guten Tag.
Guten Tag.
Yeah.
Did they say it good too?
I remember him from like German 1 in high school.
Nice. You know. I don't know what Jimmy D just did to his
mystery.
Mic. That was awesome. Say something real quick. Just
I don't think.
Okay,
you're
good.
I'm
surprised. We're good. Always good. Guten Tag.
That was the melodious tones of
Jimmy D.
Yeah.
Ross Camaronetz is with us as well. He's with Brightway Insurance, Juno Beach. Ross, how are you, my friend?
I am doing well this fine holiday weekend.
Very, very good to hear. And of course, if you don't believe me, you can check out the live stream. What do you want me to do? Move the camera? What you want?
Mike can. Yeah, Mike is better to adjust it. Yeah, because he can see.
All right.
Okay,
nice.
Cool. Thank you, Johnny.
See it. Oh, you're welcome. Ross, good to see you, my dude. I hope things are well.
Thanks, man. You too.
Pleasure always. And of course, Jimmy D over here. That's right. We've already heard his little hellos and goodbyes. I'll be right back. He runs a top producing Keller Williams team. I've told you for 14 years now, the Florida Home Pros team, Keller Williams Innovations. Jimmy D, Jim DePola, how you be?
Hey, I'm doing good, everybody. Happy South Florida and happy Easter to everybody.
And I hope you had a nice Passover. And
yes.
Do we do Festivus for the rest of us?
I do Festivus.
Yeah.
You might as well just throw that in.
Yeah.
Right.
Fine.
Yeah.
Passover and Easter coincided this year. They often do, but that's right. Wow. I call it something very different. I just don't want to offend a bunch of people today. It includes zombies. Let's just put it that way.
Oh.
Yeah.
We've got a lot of things to talk about today, including an idea I have to solve the property tax crisis, and I'm not kidding. Okay.
Nice.
I really came up with an idea, and it's like, why can't this work? And it's so simple.
Would you take a bunch of acid and like learn the world's wrongs?
I was going to say, did it come to you in a dream? But I guess your way is valid too.
Yeah. Psychedelics. Yeah.
What difference?
Did about 7 grams of shrooms. That's right. And he's like, I got it. Somebody write this down, please. Ding.
Who cares how the sausage is made as long as it tastes good, right?
Oh, I care. Once you see the videos, I'm never eating a Hot Pocket again. Tastes good. I know how it's made. You can keep it.
Yeah, thanks. Right. Like chicken fingers. Yeah, but I do have an idea. I'm not joking. I'm going to float out an idea.
Nice.
April 13th, the legislature is having a special session, trying to get the Senate and the House together on a plan. I think I got a better plan, so we're going to talk about it.
Will be like your
sounding board. Yeah, I want to see what you guys think, because I mean, I'm pretty sure this will work, but I want to hear other ideas.
All right, so if like collectively, even like the audience is like, dude, this is amazing. Yes. What do we fire off an email, tweet?
I'm
like,
hoping, I'm hoping to just go organic. That's what I'm
just go knock on doors.
I think a letter writing campaign.
Yeah.
like legit send mail.
Here's a great
Yeah.
idea.
Yeah, they're all on the same colored envelopes. It's like, oh, what is this?
Oh, so it starts to really register.
Yeah.
What's with this blue letter that keeps
Yeah.
popping up with this amazing idea?
Yes, exactly.
Huh.
Yeah, I know there's some very powerful people that listen to the show on and off. So maybe they'll take the idea and bring it up to somebody.
Shout out to
We'll
Ron.
see.
Right?
Yeah, my buddy Ron. Yeah. I'm so tight
Ronnie
with all
D.
those big guys. Yeah. So, man, you shouldn't have said Bobby D because I love that. I did a story once when I was a newspaper reporter
Is that what you heard?
where this guy, have you heard this story?
No, but he's saying Bobby D. Yeah.
So
Okay, right.
Bobby D, in this case, he was a bank robber, and Robert Allen Litchfield was his name, and he was in 2 supermax prisons for bank robbery. Why 2? Because he broke out of the first one, and then he broke out of the second one.
I thought they only gave the 3 names to murderers. They
I
give it to
know, right?
bank robbers.
Serial
But
killer.
I just
Serial
remember.
killers, yeah.
I just remember. You know why they do that, right?
So you don't confuse with another Jimmy.
Yeah,
D.
so you don't get sued, right?
Yeah.
So you don't get sued.
Exactly.
So Robert Allen Litchfield, he broke out of a supermax prison, started committing bank robberies again, got arrested, thrown back in. Then he broke out of a second supermax prison, and then he started doing bank robberies. And if you watch the bank robberies, they were heading straight to Florida. He was like in Illinois or somewhere. I don't
If
remember.
you're like tracking him, you're like, dude, he's
it's like it
coming.
was like a family circus dot of bank robberies.
Watch
right?
out for Pierce.
And then he disappears. Well, he got caught in Pensacola, so I got sent up there. And what I found out through the investigation was he was infatuated. He was infatuated that he wanted to be an actor, right? And so he was robbing banks in order to take acting lessons so he could become a better actor.
Huh.
Well, when he broke out of prison, he saved a lot of the bank money that was hidden, I guess. And he had his girlfriend / significant other, I don't know if his wife or not, but bought a like a boat, like a yacht, and then they were going to sell off in the sunset from Pensacola Beach. So
He was just going to give up his acting career?
Yeah, just like that.
Well, no.
wow.
He had a plan.
Sorry.
The plan is that while he was in Pensacola on the lam, what was the perfect time to do plastic surgery and have your face all masked up so nobody could recognize you? So he did plastic surgery while he was in Pensacola Beach. But instead of being like a normal person, keep a low profile, he was going to all the fanciest restaurants and like yacht clubs out there and stuff. And going in is like, all the food's on me. Like he's like Rodney Dangerfield in the golf Caddyshack, like Rodney Dangerfield
Right.
carried a Caddyshack. Everybody knew him. And
Or
was
he's like Monty in Brewster's Millions.
and he was telling everybody to call him Bobby D.
Huh.
He's just, what's your name? Just
Bobby
call me
D.
Bobby D.
I'm
Bobby D. Well, Robert De Niro was his favorite actor. So when I talked to the plastic surgeon, what did he want to make his face look like?
Really?
Robert De Niro.
Really?
Oh, which version?
Is
Yeah,
that
right?
awesome?
I like
Yeah.
Cape Fear.
Well,
Cape
this
Fear's
was like
awesome. Taxi Driver.
this is like
Oh, jeez.
1991, 92. So that version. Yeah, 91,
Heat.
92.
That's
Yeah.
classic.
Yeah.
Classic.
Isn't that funny? So anytime I hear Bobby D, that's the first thing I think of is that story.
But that early 90s, that is Cape Fearish.
Cape
Yeah.
Fearish.
Yeah.
Yep.
Yeah.
Counselor.
When did Heat come out?
Early 90s as well.
Yeah,
Also,
I think so.
right?
Yeah, right around there. Yeah, I'll say
91,
90.
92, 90.
Yeah.
Oh, I thought it was late, a little bit later.
Val Kilmer was in there.
Oh, yeah,
I
that
wore
was
that
awesome.
one out. That was a great movie. That movie actually got me and a bunch of my buddies putting a legit plan together on how we were going to hit all the credit unions and banks down our main street of our town. We were going to do a bomb threat at the crosstown rival high school, which was like the sweetheart. Our school was like
Wait, it was you and who else?
a bunch of buddies.
No names.
But we had it was all about he got it, the whole ball rolling. I was like, we could do that. We could totally do that because every cop would go to our other high school if you do, because that's the sweetheart. That's where that's where everybody that mattered went. Every cop would go there, and then we'd have just minutes to go down the main street, and there was like 7 banks and credit unions. Oh, we had it all plotted out.
We were ready to do it.
Thanks to the movie Heat.
That's so funny. That's wild.
How
That's
stupid
wild.
is that?
I mean-
talk about the things that pop up in your head when you hear something.
Yeah,
Bobby D.
exactly. Right.
Yeah.
Exactly.
Hey,
Hey,
and you weren't microdosing. You couldn't microdose back
No,
then.
no, no.
There was a
Macro.
No,
a
it was all
there's only
macro.
macro
Yeah,
dosing.
there's
Only
no idea what a
macro.
micro was.
Yeah. Micro, who would want to do that?
You take all of it, don't you?
Well, let's go ahead and do a couple shout outs if you guys don't mind. I want to do a shout out to Paul Lee. I'm sorry about that.
Paulie, what's up, Paulie?
Yeah, Paulie. Yeah. Yeah. Paulie reached out to us from a house that we had on the market in West Palm, and he was just what I call a Zillow caller, right? So we advertise our stuff all over the place, including Zillow. He saw the property on Zillow, gave me a call. Doesn't know it's from Adam, isn't even from this state, right? He's moving from a different state, Oregon.
Nice.
Okay. So we started talking. I asked him what kind of property he was looking for and everything. I started giving him all this information, explaining 3 things you need to know that you probably don't know about buying in Florida. We did that segment last week with Paul Krasker.
Right.
So he's an out-of-state buyer coming in, and it was just
Perfect.
Just worked out that way.
Yep.
Told him about Mike and why it was really because he's doing financing. So like you got to get to Mike or somebody like Mike. A lot of times when you talk to these Zillow people, they have no interest in really talking to the agents. You just want to know information about their property and move on. But this guy actually said to me, he goes, I really like the information you gave. I've talked to a lot of agents. I want to hire you to help me find my home. So we got him over to Mike. Mike did the total application process in probably 36 hours tops.
Nice.
TAP.
That's a good example of when I always say you should be vetting your agents. He said, I talked to a bunch of agents. You know why he picked you? Because he was like, man, this guy's giving me a bunch of information nobody else has. This is my guy.
Everybody's like this, right? Normal agents, when you're clicking and clacking on Trulia, Zillow, Realtor.com, those kind of sites, and then you're calling up the agents.
Redfin, are they still around? Redfin?
Oh my God, I was dealing with the Redfin agent just recently.
Sorry.
That whole company. I would not work for that company. Sorry,
Sorry,
Redfin.
But they still exist, I guess.
Yeah, it's kind of ridiculous. Well, anyway, we'll get onto that. But the bottom line is though when most agents, they're like, well, are you ready to buy right now? And are you going to buy cash or finance? And do you have a loan? That's all that everybody ever cares about before they get you in the car to go look. But I actually start educating people on the phone, just like if I'm on the radio show.
Right.
And they're like, usually people are like, I usually get three things: totally shut down, just don't, give a what.
Mm-hmm.
That's a certain segment, probably 25, 30%. And then another of them are like very skeptical of what I'm saying because I'm giving them so much real grade A information. It's like, who is this guy, right? And other ones, their mind is just blown. It's like, okay, I'm hiring you right now on the phone.
Sure.
Right. So Paul was kind of that. And now it was kind of interesting with Paul. He signed his buyer agreement with me a couple of days ago. But the day after he signed, he was going down to the Keys for 13, 14 days. But he has a very tough window of when his lease is ending down here. And he's got 4 kids, right? A wife and 4 kids. So, and the kids are young, baby, toddler, 3-year-old, 5-year-old, right? The oldest is 5 out of the 4 kids, right? So I'm going out today and I'm going to go looking at I'm going to go look at the top 2 properties for what he's trying to buy today. I'm going to take videos, not videos to sell the property, but to show all the good things and the bad things about the property.
Yeah, like you're sending it for him personally. Like, here, look at this. Watch. Oh, I don't know about that. Yeah.
Mm-hmm.
Can you do me a favor, Jim?
Mm-hmm.
Buy that house.
Yeah, exactly, right. And then when I'm done, I'm going to be sending the video, and he might make a deal sight unseen. He might buy one of these 2. They're that I think that hot. He might buy one of them sight unseen. So we'll see.
How about that?
That means he really trusts you
very much.
He's like, hey, go out there. If you think it's right, we've talked enough about what we're after. You know what we're after. If you see it, that's
grab it, and then we're going to have a longer inspection period, so he has time to get back and look at the property. If he doesn't like it, even before he puts a escrow deposit down or pays for an inspection, if he doesn't like it, we'll be able to back out and say, hey, this one isn't for me. Let's go on to the next one.
Of course.
So that's our plan with Paul. So congratulations. Really excited about that. Going out to look at his properties today.
From Oregon.
Oregon, yeah. I lived in Eugene. So I was like, hey, how is it in Oregon back there? They talk about Florida, man. they should have an Oregon man, because Oregon is because you
Oh, yeah.
lived up
The
in that
Pacific
kind of
Northwest.
area. Yeah,
Pacific
that's a
Northwest
crazy area.
is a unique spot, just like everywhere. And there's some quirkiness for sure.
For sure.
Yes.
And the thing is, they got people that want to break away from Oregon and move to, I think, connect to Idaho or Montana or something like that. It's like all this crazy stuff's happened over there where they're like the Key West conquerors who don't want to become a part of the United States anymore,
That's
right?
funny.
So you have all this stuff. You got the Bigfoot stuff out there. Got all that kind of stuff.
We got Skunk Ape. Don't you?
I know, but they started with the Bigfoot, right? So, but
well, I don't know. Skunk Ape could have came first.
they were old
What
school.
What word are you saying?
Skunk Ape?
You never
Skunk
heard?
ape.
You never heard of skunk ape, Mike?
No. I
Oh,
should be ashamed, right?
That's our Bigfoot.
Okay.
Yeah, that's I'll
Skunk ape.
tell you. I did a whole big feature story on this skunk ape in Ochope, Florida.
We
Florida.
we saw a skunk ape right out here. I'm at the wrong building. We're in Port St. Lucie building.
Yeah,
We
you
know
saw a skunk ape out there,
Okay,
Have
well,
you heard of this, Ross?
or did you see a real
I've heard
radio
of the
listener
skunk ape.
dressed up
Oh,
as a
okay.
skunk ape to make you think there was a
all right,
skunk
to be
ape?
fair, we didn't see the skunk ape, but we heard and smelled the skunk ape.
Oh, the smell of the
Yes,
skunk ape.
Ross,
Is
are
it-
you familiar with the skunk ape?
I mean, I've heard of it. I have not encountered one myself.
Well, they're very evasive.
Yes,
Elusive.
they are.
Clearly.
Elusive.
Does it look like a sloth?
No,
It
it looks like a
skunk
Bigfoot
ape. Yeah, it
that
looks
lives
like-
in the glades.
Yeah.
Okay.
But
Yeah,
it's stinky.
so like a hot,
Did you say
sweaty.
it looks like a skunk ape?
Yeah,
Yeah. Thanks, Jim.
it tastes like chicken.
Yeah. Tastes like a cross between there's a joke. I can't tell the whole thing, but the punchline is it tastes like a cross between a bald eagle and a manatee.
So we
That's
got
awesome.
so the only reason why Oregon doesn't have Oregon man is their public record laws stink. So the reporters can't find out all the crazy stuff like they do in Florida. That's why we have Florida man, because we have the second
Meaning they
strongest
don't,
public record laws in the country.
so they don't keep track, or this is
You're
not
not allowed to
accessible?
go look at the
Okay.
reports and everything.
all-
Yeah,
it's
you can't
private.
see.
It's private.
Yeah.
Oh, they keep their private
They keep
information private.
yeah, we're
Yeah.
the only ones that are
Nice.
just flowing it all out there. It's like,
Right.
we don't care. We'll
Here's
tell
your-
you everything.
We're proud of it.
Here's your privacy.
So
I had a client who we were talking about getting sometimes if you had a relatively recent divorce, one of the questions is, are there any financial ties as a result of that divorce, whether it's like, alimony, child support, shared property, things like that. And he was like, oh, you could just find the divorce papers online. I'm like, well, they are accessible. I can actually see when you divorced, the judge that presided everything. I just can't see the actual papers. So they do have some level of privacy.
yeah,
You can see that it happened.
Yeah.
You just can't pull the
You
document.
can't see how it broke out.
Yeah, unless
Yeah.
you're one of the,
Well,
the
it's
parties.
just like the mortgage and the note. They record the mortgage, but they don't record the note. The
Promissory
note has the
note, yeah.
terms in there of what you
Mhm.
paid for interest and all that other stuff. So that's
Mhm.
not recorded. Same thing. Okay, so anyway, Paul, we're gonna go help Oregon man go find a house. Now we got Shauna and Scott. Thank you so much for meeting me last week. It's kind of interesting case. They had a neighbor who left their house to them, but the house has a mortgage, and now they can't pay it because the person passed and they're going through probate. So the house is in foreclosure.
While it's in
And,
probate.
While it's in probate. And they were planning on waiting for the probate to end before they sold the house. And I said to them, pre-consultation, this is on the phone, I said, you know what? Just because you're in probate, the foreclosure is stopped where they can't foreclose and take the property away, but all the accruing late fees, interest, fines, penalty, attorney costs, court costs for filing, all of that is accruing, tick, 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 and it's getting worse and worse and worse. And you have a mortgage on that property, you should try to sell it before, as part of the probate, but like before the probate's concluded. But I wasn't sure. I'm not an attorney, right? We've talked about this a lot though, but we had Paul Krasker on the show last week, and Paul's like, sell that house.
Yes.
Right. So we met with Scott and Shauna. We're going over everything. They have to do some repairs on the house. I'm going to be talking to their attorney next week just to make sure everything's copacetic and everything's going to go great. And Scott owns an air conditioning company. I think it's called AirServe. If it isn't, I'm sorry, Scott, and I promise I'll
Ooh.
correct it next time. I know. But Scott has husband and wife air conditioning service. They went out and looked at one of my houses just recently. That's how I met Scott and found out about this stuff.
Nice.
So
Did
if-
Paul have any insight about Can we talk about that? I'm curious
about probate.
Well, you started talking about like there's interest and stuff accruing on it, and now I'm thinking, wait, they're neighbors. The neighbor left them the home, but they're not like inheritors of his estate. So who's responsible for the debt and the accruing interest? It's his heirs, right?
Yeah, but I don't want to get too much into this, but they're controlling the estate also, but they have to go through the process, right? So they're the executor of the estate, and that one piece of thing is theirs, but they have to go through this process. So it is accruing that whole time. So
I was wondering who's responsible for it.
Well,
it's not necessarily the new homeowners, right? It's whoever inherits his financial picture.
That's a really good question. I don't have the answer. When I don't know, I don't know. I'll ask the probate attorney when I talk to him early next week. I'll get back with you on that, Mike, because I don't know. It's a good question, though. Mike always asks good questions.
Just because I was like, wait, who has to pay that?
He's got that logical, analytical mind, right? So anyway, congratulations to thank you, Sean and Scott, for meeting with me, and we're going to get going on that. Also wanted to say that wanted to give congratulations to Danny. She's the one, the homeowner that has a house that had a $670,000 code enforcement fine with the city of West Palm Beach.
Oh, yeah.
We got that resolved. The house just appraised. We're ready to close. We'll be closing very soon. She's very, very happy. This has been an ordeal for her because this whole process started for her since September of last year. And now she's finally got the green light that we're moving forward. And congratulations.
Wait, that's another one, Jim, where you were kind of trusted sight unseen to get into contract, right? There was a contract on that one?
That's my next shout out.
Oh,
okay.
I'm sorry, I'm preempting.
No, that's okay. So my next shout out is to Aaron and Collie.
Oh, okay.
They are the buyers at Danny's house, and they called off of our advertising. Aaron is a master with AI. Okay. Aaron knew everything about that neighborhood in that area, not just that area, but areas all surrounding Northwood, because this is Northwoody, I call it. It's like right around Northwood. And she knew everything about property values increasing or decreasing, crime rates, schools, whether or not it's an instant millionaire neighborhood, which we did a couple of shows about. And she was just awesome. And so her and Collie decided to buy the house or turn an offer in sight unseen based on my description, advertising with the videos and everything. And they came in second place. And the first place buyers, what happened with them? They thought they were outsmarting us, and they wanted us to put in a clause that if the code enforcement fine was reduced to only 10% of the full price, that the seller had to sell the house to the buyers no matter what. We wanted more flexibility. They said, you're never going to get lower than 10%. We got 1.3%. Thank you very much. And that guy was an attorney, and he was like, the city never does below 10%. I go, not this time. So anyway, congratulations to Aaron and Collie. They were so happy when the house appraised, Mike.
I bet.
They're using Mike Ralph from the mortgage firm, and they're not first-time buyers, but they are getting down payment assistance. How much, Mr. Mortgage Firm?
So technically, it's not down payment assistance, but it's $15,000 Smart Start incentive.
Nice.
Yep.
So they got $15,000 to help buy the home.
Yep.
Sorry, I didn't mean to call it down payment assistance.
No, that's okay. We just got to be technical.
It's an incentive, but it's a mortgage incentive, not a seller incentive. It's a mortgage incentive.
Well, they were only able to acquire that incentive because they went through the mortgage firm. Fortunately, they did decide to go through Mike, and that obviously, Mike, that home is in a neighborhood that qualifies.
Qualifying neighborhood.
Smart Start.
Exactly right.
Awesome.
Yep.
That's
a
so
win.
Cool. Yeah, that's such a big win. They're so happy. And so it was a very good week that way. I also met with a lot of really cool people. I met with Chris and Lindsay. They were referred to me through Frank. Frankie, thank you so much for referring so many people. Frankie referred us to Josh and Laura, who are buying houses through me and Mike.
Okay.
Frankie's been a big funnel to the whole Florida Talk real estate team.
Thanks, Frankie.
Thank you so much, Frankie.
Yes.
So I met with Chris and Lindsay. They're thinking about selling their home in Boynton Beach because it's starting to become a blended family. And then they're trying to move out to the out where you live, Mike, out in the acreage areas where they're thinking they're not ready to do it yet. We had a really good consultation last Sunday, and they need to work on the house a little bit and everything, but we're gave them really good information. So what we're going to do is set up a search for them where they're going to be looking for properties to buy. I think that eventually will give them motivation of when they want to put their house on the market, because they don't have to do anything right now. And that's one thing I want to bring up. Just like Mark, I met with Mark and Chris also kind of last weekend. But Mark and Chris, they also were thinking about selling their home in Boynton and moving up to the Wellington Royal Palm area because their grandkids, to be close to their grandkids. But they don't have to, and they're not sure, and they're very well off financially, and they like their unit, but it's a lot smaller than what they're looking for up north. They weren't sure what they wanted to do. We had a really good conversation, so we figured out what it would take to stage their house to get the max price they can get for today. Then we did a seller net sheet to show how much that they would probably net if they were to sell their house, so they could budget for the purchase. And then we set up searches for them of the areas they want to buy. And now they're just analyzing everything. And that's the one thing I want to tell you guys is there's a lot of people out there that think that we're going to come in and just get that listing, and do that. That isn't what I look at it. I look at it as a consultation. What are you trying to accomplish? Why are you trying to accomplish it? Let's see if it's going to work, and let's see what it looks like. And if it looks good, let's sign the contract right now. We did that with your friend Scott.
Nice.
And his wife, Suzanne. We met with them and figured out a plan and signed the agreement right there. With Mark and Chris, we didn't do that. We waited to sign the agreement. I brought it with me in case it was a right now thing. But we're just going to let it happen organically. And when it happens, it's going to happen. And I'm really happy that they're in our database. And I know they'll refer me out to other people that might be more ready right now because of the great information we gave them. And that's what it's all about.
Yeah, the time is best for them when the time is best for them.
Exactly.
That's it.
Hey, let's go ahead and take a break right now, if you don't mind. Is it a little too early? Because I'm seeing that. Okay, let's go ahead and take a break right now. On the flip side, we're going to come up with Jimmy D's property tax plan. Okay, I'm so excited about that. I'm actually a little excited about this. I know it's silly, but I'm
excited.
I think this is a really good plan. I thought it was just cold in here. Do you see what they did?
Oh, look at that.
For people that aren't watching on the show, they everybody's always freezing in this room except for me. For some reason, I'm the only one that's never cold. So in the infinite wisdom of the people in this that use this studio, they took a piece of cardboard and taped it up against the vent.
It works.
It's called engineering.
Well, it's kind of, but the cardboard is now getting old and brittle. The tape is getting old and brittle. It's starting to sag down now.
But it's not as cold.
Right. It isn't as cold.
It's cold, but not as cold.
So we're going to talk about Florida property tax elimination on the flip side.
I like it. That's excellent. We got a lot to get into. Plenty of time remaining. Of course, you're always welcome to join us. 877-927-6969 if you'd like to be involved in the conversation. And if you have a question for one of the pros in studio, don't be shy. We are live on this Saturday. It is the 4th of April, already April 4th. Oh my goodness gracious. Thank you for being with us every Saturday. We got a 4-minute reset. We're back at it. If you're not comfortable on the radio, always remember FloridaTalkRealEstate.com. We heard a bunch of people referring. Here's your referral. If you need a team of pros, if you're buying a home, selling a home, you're stuck with a home, you don't know what to do, anything that touches the world of real estate and you need professional guidance, remember FloridaTalkRealEstate.com. Facebook, YouTube, consume away, hit share and like. You can change lives, including your very own, with the pros of Florida. TalkRealEstate.com. That's Florida TalkRealEstate.com. We're back in 4 minutes. Thanks for being with us every Saturday. Florida Talk Real Estate right here. It's Real Radio.
We're everywhere you need to be. Find your favorite show at realradio921.com. Real Radio Weather.
I'm meteorologist Lois with CBS 12 News. Warm conditions continue for your Saturday.
Oh, I'm so jealous.
In the lower 80s, not too bad. We are going to see that strong onshore breeze, so if you're along the coastline, that'll help to keep things feeling comfortable.
Rain chances increase for the second half of the day today and overnight as we see some more moisture pushing into the area.
This report is sponsored by Staples. Want a great way to boost your brand? Custom labels at Staples will help packages pop. Stand out and take out boxes really take off. Shop now through April 18th. % off all custom labels. Staples. That was easy.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rao from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rao will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rao, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to FloridaTalkRealEstate.com. That's FloridaTalkRealEstate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because FloridaTalkRealEstate.com has you covered. That's FloridaTalkRealEstate.com.
You're listening to 92.1. We are an iHeartRadio station. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Yep, absolutely. You can dial in 877-927-6969. Questions, comments, concerns in the world of real estate. If you'd like to be involved in the conversation at hand, don't be shy. Phone lines are open, and we love talking to the peoples. It's a Saturday, April 4th, we determined earlier. Thanks for being with us. Always remember FloridaTalkRealEstate.com. And we live stream too on a Saturday. Jimothy set up all this stuff. Timothy's in here getting going early. Live stream on Facebook and YouTube. Florida Talk Real Estate LLC on Facebook. Or that's YouTube, actually. That's YouTube. It's just Florida Talk Real Estate on Facebook. Timothy, what's up, dude?
Good morning, Johnny. How are you, bud?
Dude, I'm already in St. Paul.
You got a little short timers going on, huh?
Good Lord.
What's up there that you got any big plans in St. Augustine?
Going to see Billy Mother Freaking Strings tonight in St. Augustine.
All
Yeah.
right. All right, a show.
Yeah,
Nice.
it's gonna be amazing. I'm already there.
How long are you going to be in the area?
Not long. No, it's a quick.
Oh, so you don't get to see the Ford?
You're
or
driving back
tonight?
We'll drive back tomorrow.
Oh, okay.
Let's go do this 5-hour drive. I think we got one of those coming up. Couple weeks. We got a show in Tampa, and we're driving back that night.
That's not as bad.
It's not as bad.
Tampa's
It's like a 5-hour drive. Well, 4. I was gonna say, you know what? When you say it, now that I say it, it's probably about the same distance as St. Augustine.
No, St. Augustine's probably like 4.5.
Well, I guess
Yeah, because Daytona's like 4, isn't it?
Daytona's like 3.
Okay.
Yeah, so probably about the same, actually.
Okay.
Yeah, probably about the same.
I was thinking Tampa's 3 and St. Augustine 5, but I could be wrong.
Yeah, now that I'm settling in, I feel like it's 4 on both.
I'd rather, in my mind, I'd rather drive home from Tampa than St. Augustine.
See, in my mind, I'd rather drive home from St. Augustine. That's interesting.
Well, 95 is such a beautiful drive.
Ross has lived here way longer than me though, so I should probably lean into his side. And I bet he's done that drive way more than me. But yeah, we got one of those coming up in the next couple of weeks where after the show, drive home.
I mean, you don't want to do that. You might as well look for a hotel room.
Gotta do what you gotta do.
You gotta get to work.
Gotta do what you gotta do.
Yeah.
You gotta do what you gotta do. Mike Rao, he's the mortgage guy from the mortgage firm. Hello, my friend.
Hello.
Speaking of a guy that will do what he's got to do.
Yeah, yeah, every time.
Every time.
Every
If I have
time
to.
he does.
He's
Yeah.
the man.
I mean, if you got to do it, you got to do it.
You gotta do it. It's gotta be done.
He's the man.
Sometimes you just pinch your nose and
Ooh.
between a bald ego and a manatee.
Right. That's right.
Just like
Ross Camaronets is over here with Brightway Insurance and Juno Beach. He knows you just got to do what you got to do sometimes.
That's right. And the drive distance, it's 3 hours and 38 minutes to St. Augustine and 3 hours and 23 minutes.
So like,
Yeah, see, I
pretty
told
damn
you
close.
Tampa's closer.
It is. You're right.
Yeah, I would rather drive from Tampa.
Ross is right.
Saves me my 25 minutes.
They're below 4 hours.
15
so that's
minutes.
like, you can do that.
Yeah, you could, I guess. Yeah.
Yeah,
Gotta
but
draw
and I will.
straws
And
to
I
see
will.
who it is.
But
Yeah.
the drive to St. Augustine's better.
Agreed.
Yes.
Agreed.
Because Tampa traffic.
Agreed.
I don't
I'm
know.
with you. That's Jimmy
Yeah.
D, Jim DePolo with the Florida Home Pros team. Jimmy D, how you be?
I'm doing good. I'm doing good. Thank you everybody for telling us we had an echo. It's because I didn't mute my my personal thing. So we fixed it. So thank you so much for letting us
you
know.
must have muted it by the time I looked over at it because
Yeah,
everything
that's
was muted.
Yeah.
Anyway,
yeah.
Was it
So,
the whole
thank
first
you.
segment or just since
No,
we came
just
back?
since we've been talking about St. Augustine.
So you came in and you unmuted and now you're remuted.
I lost it. I hit the wrong
Oh.
button when I was leaving the studio for the break, and then we had to walk back
Oh.
in. It's all my fault. It's all my
Long
fault.
ago.
It's always on my fault when it comes to this stuff.
You fat fingered it.
Yes,
Oh, the old fat figure.
the old fat figure.
Damn it.
So I want to talk about Florida property taxes and the elimination of it. We've talked about this a lot over the several months, I guess. We talked about states that have tried it and failed, states that are still trying it, one state that passed it, and then they're trying to take it back
Right.
to eliminate Florida property taxes.
I've had a lot of buyers ask me about it.
Have they?
Yeah, because
Yeah, me too.
In talking about payments and qualifying payments, I talk about property taxes. Then inevitably, if somebody's paid any attention at all, not to us, but just like news cycles, it'd be like, oh, so what is happening with Florida property taxes are going away, right? And then I have to get into it can be like, well, who knows? Or I can, even if they do, here's what we're looking at. And then there's the whole ad valorem, non-ad valorem, and then they want to segment out the school and the fire. You could see how this initial 10-minute conversation about like, hey, get to know each other can spiral into something a little more complicated.
Yeah,
I have to watch myself there.
And what Mike just said, my way is so simple to deal with this. It's so simple, right? It's so simple.
Well,
so
then why hasn't anybody else thought of it, Jim?
I don't know. So I'm gonna maybe somebody has and it's been turned down or something. But
Maybe
I think
it's
this
too
one-
simple, too effective, not enough ways to make money.
Well,
I'm not sure what I'm more excited about: hearing the idea and like
Or
it
making
being
fun of me.
brilliant. No, and it being brilliant, like
and
wow,
being disappointed.
we're onto something, or like being able to shoot it down. Like how
Yeah.
easily can we poke holes
It's like,
in
nah,
Jim's
it
idea?
sucks.
I'm ready. I'm ready for it, Mike. I'm ready. So let me just set the foundation of what's happened in the state level, and then I'm going to tell you how I had the inspiration for this idea, and I'm going to show you like how I think it will work. So, because Mike asked me what's happened before we started the show, what happened with the legislative plan. House tried to eliminate property taxes over time. Remember, I think the plan was they were going to give you $100,000 extra exemption for 10 years. And by 2036,
everyone would be
paying
eliminate the ad valorem taxes.
The ad valorem taxes, right? Which doesn't include schools and things like that.
Right.
Well, it does, but they would segment out schools and fire.
Oh, that's right.
Yeah.
So what is the non-ad valorem then?
That's for
I forget. Is that like fire district and stuff?
So the ad valorem pays for budget items and like the regular budget. The non-ad valorem pays for service items in the budget. So things like garbage pickup or the water management district like work that they do. So things that just cost, maybe it's like third party.
Right.
I mean, I don't know.
Right.
But
so
services.
So how the House wanted to do it is chop off, add on $100,000 exemption to all homesteaded people. This is just for homesteaded, right? And then in 10 years, they don't have to pay the majority of those taxes anymore. The Senate was like, no way, Jose, that ain't happening. And they just didn't even bring it to the floor for a vote, right? So the session died, or the session ended. It didn't die, but the bill died. So now DeSantis is now, Governor DeSantis is now asking everybody to come back for a special legislation, I think next week, April 13th. Is that next week? Or maybe the week after? I don't know.
It's 10 days.
10 days. Oh, today's the 3rd, right? So 10 days from now, they're supposed to get back, and they're supposed to, try to come up with a plan that's going to work for both parts of Congress so that they can bring it, legislators, so they can bring it up to the governor to sign. Now I want to tell you like what is been so frustrating me for the real world. I've been working with a lot of middle class buyers, right? So these are all like working Joes, right? They're just like me, right? They're all working Joe people. They're just trying to buy a home, right? Either they're trying to get out of a renter situation and turn into the first time home buyer, or they've owned a home sometime in their lives, but they don't own now and they want to buy now. Or they're trying to sell a house or let's say a small condo, and they'd like to get into something a little larger or something. But the situation is when it comes to the tax bill, it could be tremendously debilitating to people. So the one example that I'm going to bring up, because I remember the numbers, because I do this all the time. I had a couple, I'm not going to mention names. They wanted to buy a house. They're at the upper limit of their price point. Let's just say that they're like 550-ish, right, in Palm Beach County. They really, really want a single family home. So they finally found a home that was at the upper limit of their budgets for the price range. But I really wanted to make sure that their tax bill was going to be okay after they bought. And Mike will explain this about this part in a little bit. So the tax bill for the current family was $3,800 a year. But when you calculate the tax bill for them, because the house had been homesteaded for a long time. So when you calculate the tax bill for the new buyer on the Palm Beach County property tax calculator for that property, which is what you should be doing to give you an idea of what the tax bill, your tax bill will be, it was $9,300.
Oh.
So it jumped up from $3,800 a year to $9,300 a year. Bless you, man.
Sorry.
So no, that's okay.
And there's no portability in this particular case.
In this case, no portability because they don't own a home. They've been renting, right? So there's no portability, get a discount or anything. So I see this happen over and over again. So if you're paying basically $6,000 a year more in your tax bill, that's $500 a month that you're paying extra. And now that barely affordable home, really in the long run, isn't that affordable for them because they know this tax bill cometh, right? The tax bill's cometh, right? So Mike, before I tell my idea on how to maybe solve a problem like this, can you tell us how like the taxes change when you have a homesteaded owner and now the new buyer's buying a property, how you calculate that to make sure that they understand what their real what their real mortgage payment is going to be compared to what their approval for the mortgage when they move in.
And you should maybe just like flesh out that concept. So why would it go from 39 or 3,800 to 9,300? Well, the concept is when there's a change of ownership, the property taxes reset. So basically any exemptions that have been in place that kind of reset, they get stripped away, and you kind of go back to basics as far as calculating property taxes. And so one of the benefits of the homestead exemption is that not only do you get a reduction in like the value that the tax is calculated on, it also caps how much that value can increase year over year. And so the longer you have a home that has homestead protections, the lower your taxes will be relative to somebody who doesn't have a homestead exemption, right? So if there's no exemption in place, you're always kind of be at the top level of what taxes could be. If you have the exemption, it gives you immediate savings, but then over the long term, you get a bigger and bigger gap of savings compared to a non-homesteaded property.
And that figure is 3% for homesteaded owners. So think about this. If you have a, let's say that you have a $5,000 a month tax bill, okay? So if you only, and let's say your property value goes up 20% according to the property appraiser that year, okay? You can only be, your tax bill can only increase by 3%. So 3% of $5,000 is
Not
only
quite right.
$150.
So it's not the cap is on. So you have to think about it like I don't know how to get into it. There's three kind of important values that the property appraiser uses. Number one is the market value of the home. Okay, market value, basically they're assessing it every single year on January 1st of the year. What's the market value of the home? That's going to go up and down with the real estate market. Okay, it's not the same thing as what you could sell it for or buy it for. It's their version of what's the market value. Below that is the assessed value of the home. And then below that is the taxable value of the home, right? And you pay taxes on the taxable value. So basically a millage rate or a percentage of the taxable value. So when there's no homestead exemption on the property, those three values are all the same. Market value, assessed value, and taxable value are all the same number. So the first year you buy a home, if you bought it for $550, let's just use that as the market value. The very first year, market value, assessed value, taxable value will all be $550,000. And then your taxes are applied to that taxable value. So when you have a homestead exemption in place, the very first year, market value and assessed value are the same, but the taxable value is $50,000 less. So take that 550 scenario, market value 550, assessed value 550, taxable value 500,000.
And that's what homesteading does. It knocks 50,000 off of your
the existing
taxable.
Homestead. It's $50,000 reduction before the tax rate is applied.
Gotcha.
Okay. Now with the the other benefit to the homestead exemption is it caps that assessed value from increasing. And that's your 3% cap. So the second year, third year, fourth year, your market value is going up with the market. Your assessed value, that middle value, can only increase 3% year over year.
Versus somebody who's non-homesteaded could potentially go up 10%.
Is that the market? Yeah, I think there's a 10% cap year over year. Yeah,
there's a 10% cap.
If the market goes up 20%, even if it's not homesteaded, your assessed value can only, your second year, third year can only go up 10%.
10%, but a homesteaded can only go up 3%. Yes. That's the max.
So that 3%. So then that's where the 3% comes in. The assessed value can only increase by that. Then you reduce it 50,000, then you apply the tax rate. But you can see, like, especially over the years, or maybe you bought when the market was in kind of like a down year, that 3% cap, you start to get a very big gap between the market value of the home and the assessed value of the home, right? That number gets bigger and bigger the longer you have your homestead in place, which is why you'll get a home where the current tax bill is only $3,800, but when it resets, it's going to be $9,300 because that exemption has kept the assessed value artificially low for all the years that that existing owner owned. And then when you reset it, like, boom, you're going to get stuck. Now, Jim said go to the property appraiser, use their property tax estimator to kind of get an idea. I would agree with that partially. It's very conservative, meaning it's going to give you a bigger number than what's going to happen in the real world. The reason is they have you type in the purchase price. It's kind of like the start for their formula. What I would encourage people to do is take the existing market value of the home, add some sort of reasonable appreciation percent, 5%, 10% if you want to be conservative, and then use that as your seed for the calculator, right? So
that's why you have different numbers, because Mike's always more refined than the numbers I use on the property tax calculator from the property appraiser.
Because the question is, like, people want to say, well, what's my tax bill going to be? right? Because there's implications. Like Jim talked about a $500 increase on your payment. But if you have an escrow shortfall, that same $500, it could be $1,000 increase on your payment, right? Because you got to make up the shortfall and collect for the higher bill.
Yeah.
So there was a real life example of that we just dealt with somebody. They came to us and said their mortgage payment went up $1,000 a month. So brand new, bought a brand new home, had a mortgage payment, was paying it on time all the time, and then all of a sudden, boom, the bill goes up $1,000 a month several months later. And he's like, what's going on?
Or you get a letter that says like, hey, your payments, we've done an escrow analysis, your payment's going up $500, but in order to keep it there, you gotta cut us a check for $6,000.
Right.
Or we can stretch it out and your payment's going up $1,000.
Right.
And it's like crazy
So
if you're not prepared for it.
when we did the research on that property, Mike and I, what we found out is that they were $6,000 a year short, basically, on what they were collecting for escrow. So if they had a choice, they could give the bank $6,000 and then their payment would only go up $500 a month and it would stay there, right? Because the escrow would be full.
Now you've reset. You've had that first like kind of
escrow.
shock with the property tax reset. You've reset your payment, and so now it should be a little bit more stable.
Right. But if you don't have that $6,000, just say, hey, sure, just as a surprise, you owe me $6,000. They say, well, you don't have to do that. Instead, we can increase your payment to $1,000 a month. And then when you pay us back that $6,000, it'll drop back down to that $500 a month afterwards. Right. Not really good situations. There's lawsuits all over the country with developers about this right now, because there's, I don't know if they're class action lawsuits, but the lawsuits are basically saying this: hey, you're the developer. You told me to use lender financing, developer financing, right? Your salesperson works for you that represented me as the buyer. And you told me that I was approved for the loan, but you didn't tell me my tax bill was going to change later. And they had no disclosure about that. So now they're suing people. I just closed a deal, Mike, and this is pretty funny. I've never seen this before. Check this out, Ross, where in the disclosure of buying the home, this is for Laura, the title company had a form called the Property Tax Shock Statement,
Nice.
SHOCK, shock statement, because it's so shocking that your tax bill is going to change
Really?
over time. And they actually have you fill that out. So the title company doesn't want any blowback about it. Even the title company is trying to protect themselves. So this is like a real thing that happens every day. So this gave me an epiphany. I was driving around
Now,
steaming
all
about
that
this.
said, that whole explanation,
Yeah, this
the
whole thing.
Market value, assessed value, all of that's going to go out the window here, potentially.
Potentially.
Yeah, like we're
Jimmy
not even
D's
going to
fine.
need any of that stuff.
Yeah. So, well, no,
Should've
you're
told
going to
me.
need some of it. But here's
Oh.
my question. Remember, I've been saying over and over again what I think is really unfair to if you're really worried about controlling property taxes. How can it be where I looked at one property yesterday, a property that I have control of right now. The 5 years are 2020 through 2025. If you look at this company called IMAP, which tells you what the property appraiser increased the value of each year. So 2020 was the base year, right? They always start year number one is the base. 2021, they had a 32% increase in property values for that year. Okay. 2022 was 11%. Then 2023 was 0%. In 2024, I got the numbers right, but not the years right. 2024 was negative 9.8%, so a 10% decrease. So if you took the 4 years and you had the flat year, the negative year, you're up about 33%,
Yeah.
right? Now, even if nobody changes the millage rate, they're making 33% more in tax base, and nothing has really changed other than one person bought the house until the new person bought the house. So how about this? Instead of trying to do all this crazy stuff they're trying to do where they eliminate it over time, how about this? If Mike's got a house and he's lived there and it's it has a homestead exemption, and I'm a buyer and I am homesteading that house when I move in. Now, I'm not adding portability into here yet, okay? Or portability for the seller side, okay? Let's take portability out.
Mm-hmm.
How would it negatively affect the tax collection if I could just go in and keep Mike's tax bill, right? So I'm buying Mike's house. Mike's tax bill's $3,800 a year. I move in, I get $3,800 a year. Now, the reason why I say that should have no effect whatsoever on the way county and city government works and all the agencies that rely on this money, if Mike didn't sell his house that year, they'd be perfectly fine with $3,800 a year.
But the budget's been set with that portion from that resident
Right,
anyway.
but we're right. That's what most people argue with me. So here's my argument to that: we're in a crisis.
Not an argument. That's
He was making.
No. I mean, no, that's a comment. When I say it's a comment, that a lot of people say, well, the county and everybody budgets on that future income of extra.
Oh no, I'm
tax.
saying the budget's already set, knowing that resident pays $3,800. They already get by with that amount of tax dollars.
Oh, the biggest.
If they're budgeting for future sale, they are budgeting wrong.
Right. So my situation is, some people, I understand what you're saying, Johnny. Right. It's already been set. So they should have no harm if I'm sliding into Mike's tax bill, right? They should have no harm. I'm paying the same Mike was. Now, some people say, well, the county and the city governments, they project that there's going to be X amount of sales and things are going to reset, and they rely on that money. But we're in a crisis right now. So much of a crisis. We're holding a special session to deal with this, and they've tried and struggled over and over again. Congress legislators tried over and over with the governor to try to fix this, and they can't figure out a problem. Well, if we had this system, there would be no negative effect except for their future spending that they're planning on getting, right? So that will make them curtail their spending in the future and not get this bonus of, hey, we had a 32% increase in value this year, which, by the way, in my opinion, I'm sorry, the property appraiser, because I like the property appraiser in our county, but it just doesn't seem right that property values, from their perspective, goes up 32% in 1 year. That's crazy town. And then to base your tax bill on that number year after year like that, it just doesn't seem to work. So now my customer can buy their house, right? Buy that house.
Won't have the shock.
And won't have the shock, and can have control. And the county has already been fined with Mike's tax bill.
So if you're buying a homesteaded property, that works out amazingly. If you're buying a property that's being sold by an investor, they're like, I'm just going to sell these properties. I guess that it's not going to change much because they haven't had the protection of the homesteading, right? So there's never going to be a tax shock. You're probably going to look for more homesteaded properties in the future, right?
One of the criteria would be, if you're on a tight budget and you're at the upper limit of budget, what you're looking for when you're looking for the properties, you try to stay within a tax bill. Now, Mike gives us that in his Quick Qual app, right? But imagine if this worked out that way, Mike, where you kind of knew what the tax bill was going to be based on the other person's tax bill. It would make things a lot simpler for the buyer and not have this risk for shock. And it also controls spending. This is the thing that people don't get about my plan, is that if you know that you can't count on these future increases being automatic for you, that you just get that extra money without even being questioned, now you got to really pull out your pencil, politicians, right, and budget crunchers for government agencies, and really pull out your pencil and start sharpening your pencil to make sure. And if everybody's being paid right now with the current tax bill of Mike paying $3,800 a year, that means you don't have to reduce your firefighters or your police or your garbage people or your just government workers that are doing stuff, garbage collection and all the other services that they give you. They're fine with Mike's $3,800 a year, right? They're not jonesing on that. This would be a way to almost back end make them curtail the prices. Because I've been in Palm Beach County as a reporter and a journalist and a realtor now since 1987. And I've watched so many different markets in this county. 87 was a very bad financial market. Well, not the worst in the world, but not a good financial market. Then we had the .com boom, and everybody was rich because everybody's making .com money, right? Then we had the COVID thing. We had the Great Recession. We had the boom before the recession with the dirty mortgages. We've been through all these markets, and when property appraisers are saying your house is going up 32% one year, and then 0% the next year, that I know that they have algorithms, they have to use something, but that is a very flawed system, I think, because it doesn't take into account, like I would have a different opinion if they said, if the tax bill goes up if the property value goes up 32% to the property appraiser, that there's a cap on how much the government agency can take from you, and like maybe automatically reduce the millage rate, like as a up and down thing, depending on the property values that year.
Right.
But I don't think they're going to do that. And this way would be much simpler.
As I'm trying to think of like some of the negatives. It does put, so let's paint a scenario here. Like, we'll use my street. All right. 10 houses in a row. 9 of the 10 have been homesteaded for a decade. And one of them isn't homesteaded for whatever reason. And they all get put on a listing, right? And they're all kind of ballpark for what they're looking for. There's one that stands out as the least desirable and put in the worst position possible because of the homesteading status, right? So it kind of negatively impacts the sellability of that one house in a way. You know what I'm saying?
It would probably be a value drop. It would probably be a price drop.
So you have to ask for less because your taxes are higher. That's
if you have a homesteaded person that was homesteading and they were shopping for it, probably yes, that would be a downside. But I think there's a downside on
that
everything
homeowner's been paying more taxes for longer, and then they're going to make less on the sale of their property, even though they've actually paid in more to the coffers of the county over that last decade. That just feels wrong.
I mean, that problem would be even more, that would be exacerbated under the House rule, because the tax changes they're talking about, as a matter of fact, what everyone's talking about is for homesteaded properties. So the fact that neighbor's home isn't homesteaded is the issue there. Why isn't it homesteaded? Whatever reason. Could be investors, could be owned by a business, could be ignorance. It could be that they forgot.
I just dealt with that with somebody.
So, but that could be a problem now. It could be a problem under the proposed bills that eliminate property taxes altogether.
It is, because then the only way you're going to be able to competitively sell that home in a market, and I know I'm really painting a weird scenario there, but you have to ask less than the house next door, even though your house might be nicer, to try to get that incentive in there because your taxes are so much higher.
I would tell my agent to explain the situation. Be like, listen, these neighbors' homes, they're going to be resetting next year. So just
not in a scenario where Jim slides in and gets to pick up that new tax rate, right?
So your idea, Jim, in a nutshell, because that was I don't know if it's ever, that's kind of going to catch on like that, the way that you
I have to come up with the thing.
A little more concise.
Save our homes, right? I didn't hear like any like light bulb moment there for me. For me, it was just like, I still hear like complications. It seems not like a simplification. It seems like just a different version of something to deal with assessed value, market value, whatever. So, but in a nutshell, you're basically saying the taxes on the home stay with the home.
Yes.
Has nothing to do with the owner.
Now
unless they can't homestead it, or does homestead have something to do with it still?
I'm confused. What
you're saying the taxes stay with the home.
Yeah, the taxes stay with the home if it's a homesteaded property.
If it's a homesteaded
property and a homesteaded buyer, the person's saying that I'm moving in and this is my homestead.
Okay, right? So they have to sign up to be a homestead immediately. So that's got to be part of the deal,
right? So if you have an investor,
you have to be a Florida resident and you have to occupy it on
just
January.
Like
so no investor is going to take advantage of buying this nice low tax.
Which actually, here's the thing: is that opens up, that pushes out investors. Now, this isn't always good for investors, but now we have more inventory for regular people, not.
But how long do you have to have a homestead on there, right? So you could just homestead for a year and then be like, all right, I'm not going to homestead this thing.
Well, we have that problem anyway with investors like try to cheat the system anyway. I'm not saying all investors, but a lot do, right? So you have to. And the other thing is there are no matter what we do with this tax situation, good, bad, or indifferent, there's always going to be winners and losers. Remember, I've always said that. But overall, I'd rather have the winners be the people trying to buy, right, and the people that are trying to buy homesteaded properties and give them a break because they're just trying to find a place to live, right? They're not looking for a vacation home. They're not looking for a rental, right? They're not doing that. They just want a place to live, and we're gutting our middle class of affordability of what's happening here. It really is a crisis, and we're going through this crisis, and I feel like this would be so much simpler to deal with than all the other stuff they're talking about now. It does get complicated when you think about portability. What happens if a homesteaded buyer that has portability is buying Mike's homesteaded property? Do you still get the portability there?
Well,
I don't know.
Maybe in that scenario, you get to choose between what's more beneficial. If my homestead benefits more than what Mike had in place, and I keep my portability, and if Mike's is more beneficial, then I get the benefit, right?
Or maybe
that's how that works.
That's true. Or maybe this, just to throw out ideas. Maybe if I'm homesteaded and I have portability, and I'm buying Mike's home and he's homesteaded, I have a choice of buying Mike's house at his homesteaded rate, right? And I waive my portability, or I choose to use my portability but not have Mike's. And then if I buy a house that isn't homesteaded, right, and I'm buying it and the tax rate's going to reset, I get to use my full portability for that, right? Because it's not a homesteaded property. Then I bring over my homestead. I'm just using that as examples.
That's the way it would be
now.
You can use your portability.
Yeah, that's right. Exactly. Like it is now, right?
So it seems as complicated as the current.
I don't think so.
To me,
the
problem that you're battling against is you have a problem with the reset.
Yes,
right.
Big problem with the reset
is the problem because
it's
technically, even if you're not a homesteaded property, you're still your assessed value, that middle value of the three I talked about, right? Market, assessed, taxable. That assessed value can only increase 10% year over year, even on a non-homesteaded property, right? So there's already a gap. There's
not
some
the first year.
Well, gets to the reset question, but I'm saying over the long term, even non-homesteaded properties have some protection against the variations you'll see in the market, right? So the 32% increase in market value, Jim, the existing homeowner, homesteaded or not, wasn't subject to that. They got a 10% increase, right? So it's already a buffer against what you're talking about. It's just the year. If you happen to buy the home, the year that it went up 32, like that reset is the problem. So it resets all the way to the market value. So maybe you play around with, you can't reset to the market value except under these conditions. Like under a normal transaction, homestead or not, the assessed value stays the same. You know what I mean? Like that doesn't reset to market value. So I think that's the big problems. Like when's it resetting completely to market value? Well, right now, anytime ownership changes hands. That's a problem. What if you pegged to the assessed value instead of the market value? Something like that. Maybe.
And they
seems like a simpler.
And you could probably just add in a couple little like side notes too. Like if you're an out-of-state buyer, it's just going to reset, right? You get the max. Screw you. You have to deal with it. Welcome to Florida.
Yeah.
Now you're Floridian, right? And if you're a first-time home buyer, but you've been living here and you prove residency, right? Maybe you can instantly slide into some advantage of the homesteading.
I forgot to say this. It isn't just potential homestead person to buy or to buy a homestead house. It should be this benefit. I wanted to go to people that were homesteading the property that was already homesteaded, right? The buyer's homes. The intent is to homestead the property. First-time home buyers, right, which automatically is that, but also the Hometown Heroes group, right? Do it for the Hometown Heroes group, even if they're not first-time buyers, right? Let them take that tax benefit. That's what's going to make it affordable for all those people. All these cities are worried about that. I have a teacher I'm working with right now that can afford under $350,000 for their mortgage. She's been working for a long time with the county school system, and she makes an okay salary. and she can afford under 350. That's ridiculous. How are you? It's too rough.
So
you need to give
instead of solving that, teacher pay problem by increasing taxes, you want to solve the teacher, affordability crisis by reducing taxes, but not being able to pay her as much money because there's the revenues. You know what I mean? It's like, how's that working, right?
See, this is what I don't like.
I
always say I like Mike's logical, analytical mind, but this is where I don't like it because he can twist things. I'm not saying in a negative way.
But we're talking about reducing revenue, tax revenue, which goes to fund teacher.
Yeah, but I'm just using that one person as example, Mike. So you need car mechanics, right? You need guys, right? You need plumbers, electricians. You need all these infrastructure people that keep everything going.
Mine was more of a general protest.
You're thinking more about just teacher salaries. I'm talking about having the people we need to run our county and our governments and our cities in an operable way where they're not priced out and they're not stressed out all the time, worried about housing.
Yeah.
And it's a very big deal down here. And I've never seen it this tough for people. Now, that being said, we're going to talk in the next segment about there's still a lot of buyers out there. We've seen a surge of buyers recently.
Yeah.
And a lot of them are not care about what's happening in the economy. They have a need that they need to buy. And they're just like, whatever the market is right now, that's what I'm going to deal with. And I'm going to go buy right now. And we're helping a lot of people like that right now. And we're going to talk in the next segment about how they're doing it. How are these middle-class people affording to get the down payment, the closing costs with the higher interest rates and everything?
Well, knowing the right people, knowing the people that know what you can get is super important. FloridaTalkRealEstate.com is a team of pros. We are taking a break, yes?
Actually, we got a little bit. Do you mind if we not take the break? Because I know what we got to talk about.
Yeah,
I'd like to roll right into Ross. If that's okay.
I can
What about our sponsors?
continue to tell you that Florida Talk Real Estate is at .com, your one-stop real estate shop. Know it, use it, love it, share it on Facebook and YouTube. But we're not going anywhere. You're welcome to join us toll free at 877-927-6969. If you have a different perspective, question, comment, concern, don't be shy. 10-12 on a Saturday, April 4th. We are live. And you're welcome to join us.
10-12, is that like 6-7?
Don't say that.
I don't know. Yeah, I know.
I haven't heard the kids saying that.
I haven't heard saying that.
10,
yeah,
12,
because it was stupid.
Oh. I mean, no, 6-7 is definitely not.
It's not in there anymore.
And it's going away.
I don't even know where it came from.
Don't accidentally say it in front of a 6-year-old.
Oh. Well, if it makes you feel better, Ross, my late teenagers were still,
they were
late
still
stage
doing
teens were still doing it. So, there's that whole window of time.
My 13-year-old is so over it.
I had my dad saying it for a minute.
Your dad was saying it.
When he figured out there was
Eric's
something
funny.
to it, like he'll like glom onto it.
That's
like,
funny.
oh, that's funny. And now it's 6-7 everything.
So, Ross, I was doing some research about the Florida insurance market, and here are some some good stats over the last 2 years. 185 times, because some of them are the same company. 185 times over the last 2 years, they insurance companies asked to keep their insurance rate flat or have a discount. I was surprised it was 185 because I didn't know how many insurance companies we have. I think we had 8 insurance companies during the crisis, Ross, or something. Is that true? Like 8 insurance companies that were insuring Florida. I think I remember.
Well, I mean, we had more
stat.
than that. We had probably that many go out of business.
Oh, maybe it was that many out of business. But now we have 52 companies that are insuring in Florida right now, which is pretty healthy. They're saying that this spring, and this is what I'm going to get to, Ross, in just a second. They're saying that in spring, there's estimates that in the Miami market, the insurance premiums are going to go down 14%. And like in Palm Beach County, it's supposed to go down like 8.7% this spring. So we are seeing huge insurance drops. It's really, really nice. It's helping everybody out. This is one of the bright spots. And Ross is doing what we don't have a name for, the campaign with no name. but it is to try to save Ross's customers $500,000 collectively this year.
SRCAF. I'm coming up with a name.
Okay,
for it, right?
Mike,
save Ross's customers. How much?
500K. How about 500K? Yeah. But
SRC.
Ross, the last time I checked with you, it was almost the end of the first quarter, and I think you were well past $100,000 by that point. Do you know where you are? You're holding your face. So you don't know.
I think when we brought it up, I think we were at something like 47.
Oh, I'm sorry.
48,000.
47, 48.
And
47, 48.
now we're at 80.
You're at 80?
Yeah.
Cool.
Wow.
Cool.
Chip it away.
Isn't that cool?
So,
I love it.
Yeah. So since we announced it, we grew it
80,000.
a little bit more than we had in that previous,
If
time
someone
frame,
takes
so.
a higher premium, are you reducing the savings?
You go negative.
we don't put it in as offset.
That's funny. I want a net 500
Right.
saving.
But I mean, typically we don't go that direction.
Oh, that's not the goal.
Yeah,
that's not the goal. Yeah.
So, so tell me, where are people saving the most money? Is there a certain type of customer that's saving the most money right now after the 80,000 is savings, or is it just blanket savings across the board? What are you finding out now that you started this campaign?
Well, I mean, we've seen, the reason we started is because we saw rates coming down and we were starting to save people money. But rates are only continuing to get better. Like you mentioned, a rate increase, I don't think it's going to be that severe. I think most of those numbers that you hear are statewide averages, like a 15% statewide average decrease, which varies by county.
Mhm.
Typically, Dade and Broward, they don't get that significant of a decrease. But we're, every single company is, announcing, hey, rates are, we're going to have a rate decrease. We're going to have a rate decrease. So
I'm loving that. I'm loving that a lot. So let me ask you.
Great words.
So I want to hear more of that. I want to hear more decrease stuff around, right? About everything.
Yeah. And not only that, but the carriers are starting to open their guidelines a little bit too. The biggest thing was roofs.
Right.
So I had, one of my, kind of very competitive carriers, if you have a new roof, they kind of only wanted somebody that with a roof, like a shingle roof, 5 years and newer, like in Palm Beach County.
5 years old or newer.
They just dropped it to 25 years.
Wow. With the shingle roof, yay. I'm so
Architectural
happy about that.
shingle roof, I think the 3-tab was 15 years. And then if you have what they call a permanent roof, which is tile or metal, and I think that one was like 40 years or something like that.
Getting back to normal. That's the way we started the show.
That's the way it used to be.
prices.
Yeah.
It used to be like that. That's pretty good. So
That's great.
the other thing I'm wondering is, Ross, since they're talking about the article I read said this spring they're going to be rate increases. Does that mean you shouldn't? Decreases, guys.
Down.
Yeah, sorry. Does that mean that somebody should wait until? Well, it is the spring, right? Aren't we in the spring now? I really suck at season.
Springtime.
Yeah, I mean,
We are in spring.
So does that mean that? I guess. Why are they saying that they're projecting then that the decreases are going to happen this spring? Have they not happened yet?
No, I mean, so there's no set time period. It's not like, okay, hey, effective May 1st, everybody who filed for rates kick in. It's as these companies file for rates and say, hey, our rates are going to come out. Like this company that's having a decrease, theirs goes into effect April 14th. That's theirs. So each company has a different timeline as far as where their rates are filed. I mean, I would say if you're going to wait, that's like waiting for home prices to come down.
I see.
You
So
know,
just go ahead.
like I'll just
interest
sit on
rates.
the side or interest rates, and I'll just sit on the sideline and keep paying a higher rate because, I can save myself 10%, but what if 6 months from now I can save myself 12%, right? Like
totally,
take the 10 now,
Mhm.
and then
Yeah.
next year, if rates are down again, you're going to, shop it again. Well, it'll,
Actually, that's an interesting point. So, like when you're talking about refinancing, if you refinance every time rates drop a quarter of a point, you're never going to save money because it costs you money to refinance, probably tap it into the equity position in your home, things like that. Does it cost money to like do a new, is there additional costs other than the premium itself?
So I mean, maybe you need a new inspection.
Okay.
But I mean, if you're trying to shop your insurance policy every 4 months,
yeah,
you're probably not going to get much. But, you know, as long as you've had a 4-point, you know, if you require a 4-point inspection, 4-point inspections are only good for 1 year.
Okay.
So if you switch companies every single year, you're going to need to get a new I mean, depending on the age of the home, but typically you would need a new 4-point inspection every single year. But if you got one today and you switched insurance companies and then 6 months from now, you're like, oh, I just want to shop it again and save another $200, then you wouldn't need a new 4-point because you still have it.
That's good.
And you could do that. And the only reason you would consider that, like if you're talking about am I waiting for this decrease to be announced by company A or whatever, but if I shop it now and I can do better, take the 10% savings now. And then when you hear this news and be like, hey, Ross, sorry, extra work, let's shop it again, right? 3 months from now or 4 months from now.
Yeah. But I mean, typically, you know, your competitive carriers are competitive
all year.
All year.
Yeah. Kind of it like if they're competitive in a certain area with a certain age of roof, you know, typically another company's not going to come in and just blow that out of the water.
Right. And your roof's not getting any younger.
Right.
Unless you put a new roof on, and then you should probably shop your insurance.
As soon as you put a new roof on, you want to find that out exactly.
Let me ask you a question about roofs again. I've had a couple of people that had to get roof quotes. Ross, thank you so much for helping me. We had an older home. Ross and his team really did a lot of research for us to get the answers that we needed. So thank you, Ross, because we had questions on permits and everything.
Amazing.
And Ross was just, his team as normal was just awesome doing all that stuff. If you're replacing a roof and you have an older home and it doesn't have the third nail, right, on it, when you're replacing a roof, that's a good time to do that. How much extra do you save usually? And I know it depends on the age of the roof and the type of the roof and all that kind of stuff, but just very generically, what kind of savings do you get on that?
Thousands.
It really depends. On the
thousands of pennies at least.
It depends on the carrier, because some carriers that doesn't affect the rate too bad, and then some carriers it could be, you know, like a $1,500 saving.
Okay.
You know, some carriers might be $300, some might be $1,500. So, you know, if we do see that, we, you know, if we do see toenails where there's legitimate toenails, where there's no metal connector, or the metal connector doesn't have enough nails, and that's why they're getting toenails, then we'll check it to see like, okay, hey, what is it if we do get, you know, either clips or single wraps, and if it makes sense, we'll point it out. But sometimes it's only $300, $400. So yeah, there's a savings, but it'll probably cost you, you know, $1,500 to $2,000 to do it.
Right. So if I'm not wrapping up, but if anybody wants to save money and contribute to this 80,000 of savings that's already happened, you just got to give us a call, and all it takes is give us your address. We give it to Ross. Ross figures it all out, gives you your answers that you need. I know you just did one recently, right?
Yeah,
right,
yeah.
Johnny?
We saved just almost 1,000. Yeah,
Okay,
almost
cool.
1,000. The reality is you're at 80 because people are checking to see if they can save money, and the goal is to save people a bunch of money. That's what Ross and his team have done. They set a goal to see if we can save a bunch of money for a bunch of people.
Yeah, and we're not doing it by saying, okay, you know, you've got 200,000 in personal property, but we're only going to give you 100,000.
Nope.
You know, we're not increasing your deductibles. Our goal is for what you got, apples to apples, or better, right? Because sometimes it comes over. You know, we see, I think I've talked about it. We see it a lot on old Citizens policies that got depopulated to another company, and, you know, they'll come to us and their dwelling coverage might be 300,000, but you got to do a replacement cost estimator. We do the replacement cost estimator to determine the dwelling coverage, and it might come out to like 400 now. Okay, well, we've got a better rate and you're getting more coverage. And so that's the direction we want to go. We don't want to, you know, just give you a lower premium just to give you a lower premium. We want to.
Yeah, if you wanted to do that, you could just call your current provider and be like, hey, cut me down to bare bones and you're paying less, just like that. It's about being covered, maybe better, and saving money.
And a lot of times it is better. Like somebody, there's a lot of, policies out there that only have limited water damage, only 10,000 for water damage. Sometimes
what's the question with mine? Do I have full coverage or
you've got
limit?
full water?
I have full now.
Yeah. And so, okay, you might be, we might have you paying the same or just a little bit less, but now you got full water damage coverage as opposed to limited.
Yep. And that's the real point here. So again, thanks to all that have reached out. And if you haven't yet, what's the holdup? You don't like saving money? Is that what we're doing? Remember FloridaTalkRealEstate.com. You talk about a painless situation to find yourself in. It's really about making sure you can get Ross your address, and then anything else he's going to need. If you can get him a
copy of your current deck page, that's I don't
beautiful.
care what you're paying. You can cross out all your premiums. I don't look at what you're paying now. Just as
what's your coverage,
except for just to say, hey, we can save you money.
What's your coverage? That's what we need to know. How are you covered right now?
Yep.
And it can
how do you know how much you're putting in your savings tracker if you're not looking at the premium?
Once we bind the policy, right? Yeah, once we bind the policy.
Now
I'm like, Mike is like,
Mike
my
is on one
question.
today.
Yeah, it's my question.
So at that point, we just make it up. We just save somebody $20,000.
$20,000.
Yeah.
Oh my gosh, 20 grand.
And I'll tell you, don't be like, I don't have a scanner. I can't do any of that. A literal snapshot from your phone, you can send that too. Just hover over your deck page, front and back, and there it is. Like it's the simplest process you can do. And then you're going to get probably a couple options, at least in my experience, Ross. Here's like a premium quote. Here's
I think for you, we showed you limited water damage.
Sure did. Yep.
For apples to apples.
Apples to apples.
You've got limited now. Here's what it'd be with limited. And then we also said, hey, we can get you full water and still save you money.
And save me about $1,000. That's right. So remember FloridaTalkRealEstate.com. If you are yet to reach out and see if you can move the needle to where you're pretty excited about it. I don't know about you, but saving $1,000 a year got me pretty excited.
$80 a month.
Yes, sir.
Yeah, on your mortgage.
And I tell you, the results vary. You can get much better results for sure. I have an older home, an older roof, but I'm
saving.
Thrilled with my results.
Should we talk about the used value on the roof?
I want to get to that just right now, but I want to just say one more thing, that you don't have to be a customer with Ross to be part of this thing. You just call and ask for the quote. You don't have to already work with Ross to get a savings quote.
And we want to save new clients and our current clients.
Mm-hmm.
We just want to save everybody $500,000.
Yeah.
So help us by letting us help you.
Please. Yes. FloridaTalkRealEstate.com. For those that are like, oh, it's just too much. I don't have time to do any of that. I'm telling you, it's as simple as can be. And once you're like, hey, I want that policy, you're kind of done. By the way, hey, Ross, I like that one. And you're kind of done at that point.
Yeah, you got a DocuSign.
That's it.
You got
hey, there's an email coming. Click.
No,
and I'm done.
It's click.
Oh.
I'm joking. No,
don't get
joking.
Don't get
Easy.
too lost in your own
Super
scenarios that you paint out of how difficult this process is. It doesn't get any easier.
We don't have that much time, but I wanted to talk about this new roofing valuation thing or whatever. I don't even understand it. ACV is it called or something?
That's right.
What does ACV stand for?
So actual cash value, you can call it actual cash value roof, or you can call it a roof payment schedule. But it's been out for a year or so, a couple of years, where carriers are offering it. And it was basically for older roofs to still get coverage, but for any hurricane damage, then the roof would be covered on a depreciated basis. So if your roof is 5 years old, they'll give you 95%. If your roof is 10 years old, they'll give you 60%, whatever it is. But the mortgage companies, or there was one particular mortgage company that seemed to catch it a lot, or not really be cool with it, or they were looking for it. But I guess Fannie and Freddie came out and said that they're okay with it, which, okay, that helps people either lower their premium or makes them able to get coverage. But I don't know if that's an awesome thing, because, let's say you have a hurricane, you say your dwelling coverage $300,000. Hurricane comes through, rips off your 15-year-old roof, maybe they're only going to give you, so your deductible is $6,000, 2% of your dwelling coverage. Then the insurance company is only going to give you 25% of what that roof costs. So now if your roof is 20 grand and they're only going to give you 5 grand, now you're on the hook for that other 15 plus your deductible.
Mm-hmm.
So you're at $20,000.
You just paid for the roof.
So I lost mine.
Yeah.
My deductible was higher than the
amount that your
premium that
deductible is
they're
higher
paying
than
out.
the premium that they're getting back.
Yeah.
So that was really only for houses. It's good that they have it to deal with the really old roof, older house kind of situation, right? But you've got to get into the house. So this is a way to get in.
The big news, I think, was the Fannie Freddie
Was
part
that
of it.
the
That was it,
mortgage
yeah.
company
Yeah,
was
so
allowing you
like,
to do it now?
Generally, think about it like this. Practically, the home is the security for the loan. So the lender has an interest in making sure the home is properly insured, in good shape, things like that. But essentially, does it have sufficient insurance? And so they set minimum requirements to meet that standard of sufficient insurance. And so insuring the home at its full replacement cost, meaning if there was a complete total disaster, like what would it take to rebuild the home from the ground up? Like that's the number when Ross talks about a replacement cost estimator, that's the number they're determining. Okay, it's going to cost this much labor, materials.
You got to insure
everything.
the house for at least that much.
Yeah, at least the replacement cost or more if you want to, but at least that. And so the roof was in there. So now Fannie and Freddie, it makes me like, I don't know who was behind the push or the lobby to like get them to accept this, but they came out and this was just, last month, that they will allow, instead of full replacement cost on the roof portion, right? Specifically the roof. This is not the whole house, just the roof. They're going to allow this actual cash value or depreciated or used value. And so, I mean, from a savings perspective, it's like, yeah, give me the cheapest insurance possible. From a claims perspective, especially if you're going to have a roof problem, like it's a major, like you don't want to be that. You don't want to be that
you
person.
could be
You don't wanna
really
be that
jammed up.
client.
You could be really jammed up.
Do they have like a minimum? Because Ross and I were joking. I was like, well, what if you get a 25-year-old shingle roof? Okay, insure my roof for the used value of it, $0, right?
Yeah.
Like I got nothing on my roof. But is there like a minimum in the depreciation schedule?
Well, each carrier has their own depreciation or whatever you want to call it, payment schedule based on age, roof type.
But it could go down to 0 potentially. Like it's worth nothing, worthless.
I don't know.
Yeah.
No, I don't. There's going to be, I guess maybe if it's way past its useful life. Yeah. But
so it's, it's like a la carte, pick your, what to cover structurally on your home. It seems a little crazy to me, it's allowed now.
With the broadening of the roof issue, getting back to the way it was when we first started this show, right? If you're getting dimensional shingle and you're getting 25 years for dimensional shingle right now, that's awesome. Compared to where it used to be.
There's one company that, okay, hey, you've got for the first 3 years, they'll pay 100%, even if you've got, actual cash value.
Sure.
So you can add actual cash value to the roof, but you got to be mindful, right? You got to monitor that.
Mm-hmm.
So if you got a brand new roof today, and for the first 3 years, even if you have your roof covered actual cash value, they're still going to, that depreciation schedule still has it at 100% for the first 3 years. Well, if you're not paying attention, and you don't switch it after year 3, then moving forward, even though you have a new roof, you're still in a depreciated.
Yeah.
You're not going to get full replacement.
It could also be, Jim, maybe maybe in Florida we're a little bit jaded, or just maybe on this show we're a little bit jaded. You have a storm come through, your roof gets damaged, you need a new roof. It could be like your roof needs to be repaired and it's costing X amount of dollars to repair. Then are you over or under your deductible? It's a whole nother question. But I don't know. Maybe it's not as bad as it sounds, but I don't know. I'd be nervous.
It'll save, if people that really want to get that older house with the older roof, it does get them into the house, but the future risk is there. So you have to really understand that if you're going to do that, correct?
Absolutely.
Yeah.
Yeah.
So
we always do our premiere and budget quotes. We start because of this change, and we know, people will give somebody a quote with actual cash value on the roof and just
Not saying anything.
You know,
Yeah.
they'll just, hey, here's a quote.
Yeah.
You know, on our budget quote now, we're pointing out that, hey, our budget quote now comes with actual cash value coverage. You don't have to take, we can always add replacement costs, but
That's on the roof, or that's because you have always done that with like
personal
your
property.
property.
Yeah. On our budget quote, we're if it's offered, we're going to put it on there because that's we only send bindable quotes. So prior to Fannie and Freddie authorizing that,
Could never do that.
you couldn't really do it.
Yeah.
But people are still going to send somebody a quote with that because it's a low premium. But then when they get down to do it, then there's going to be, hey, sorry, you got to increase your premium. This is because of the mortgage company's telling us that we can't accept, you know?
Right.
And so
that's
we'll send it out.
Yeah.
But we are pointing it out. We're talking about it in our email. When you see our quote, we've highlighted where it's actual cash value on. We're pointing out that it's actual cash value coverage for the roof.
I mean,
on our premier quote, we're pointing out that it is full roof coverage.
Yeah, Ross has taught me through the years, like there's a couple of key things you want to look at when you're like either comparing policy to policy or just like what's important when you're making decisions about the policy. So deductibles, like what's your deductible level is one of those. How is your personal property covered with replacement costs or actual cash value? And so now, okay, well, what about my roof? What about the limited water damage? All of that. Just so the list of, it's not a lot. It's like 4 things you got to look at, right? 4 or 5 things you should be kind of asking every single time you're getting quotes for your policy.
Yeah. What are my deductibles? How's my roof covered? What's my water damage?
Yeah.
And
my property.
And what?
My personal
property. Yeah.
Personal
How
property.
it's covered. Yeah.
Well, Ross, thank you so much. And it's nice to have good news again. We have happy Ross.
Yeah. It's awesome. We're saving people money,
Yeah,
as opposed to being like, well, I know you were going up 3,000, but we can, reshop you and it only goes up 2,000. Is that still savings?
It
It
Look,
is.
He's actually
It feels like
he's beaming right now. remember 23, 24, he'd come in here. It's like, I don't even want to be here. Come walking his head all sucked.
Hey, it looks like 2 more insurance companies are going out of business and they're filing for 70% rate increases. How's that going, Ross?
It's awesome.
It's like, hey, it's going great.
You could always Ross, he'll have how many citizens policies are we writing versus non-citizens policies?
Oh man,
as a good barometer.
Yeah, I probably written 5 last month. I have to go look, but it wasn't a lot.
So it's back to the old days.
Yeah, it is back to the old days. Yeah.
That's supposed to be the insurer of last choice. That's right.
That's the way it's supposed to be.
Safety net. Yeah.
Yep. Hey, let's go ahead and take a break if you don't mind.
Okay.
Do you think it's kind of too late?
Sorry.
Okay, we're going to do it at 10:40. We're going to come back roughly 10:40, 10:41. And then we're going to talk about, which we haven't talked about, is like what's going on with the interest rates right away. And we're going to talk about trying to buy a home when you're just a middle-class buyer, just trying to get by. We're going to try to figure that out too.
Great. Not a ton of time, but still some time remaining. If you'd like to join us, don't be shy. 877-927-6969. Of course, if you're not comfortable on the radio, believe me, I understand. Remember, FloridaTalkRealEstate.com. On Facebook, on YouTube, lots to consume. Hit the share and like button because you can absolutely change lives, including your very own. If you're buying a home, selling a home, stuck with a home, you don't know what to do, you need professional guidance in something that touches the world of real estate. We got the professional for you. And a team if you need it. FloridaTalkRealEstate.com. FloridaTalkRealEstate.com. We're back in 4 minutes. Thanks for being with us every Saturday right here on Real Radio.
We're everywhere you need to be.
I've been everywhere, man.
Tell your smart device to play Real Radio 92.1 on iHeartRadio. Here's what's happening with the weather on Real Radio.
I'm meteorologist Charlotte Carl with CBS 12 News. Pleasant but warm conditions continue for your Saturday. Temperatures will get into the lower 80s, not too bad. We are going to see that strong onshore breeze, so if you're along the coastline, that'll help to keep things feeling comfortable. Rain chances increase for the second half of the day today and overnight as we see some more moisture pushing into the area.
This report is sponsored by the Hartford Auto Insurance.
Wait until you hear this. You could save hundreds by switching to AARP Auto Insurance from The Hartford. Visit trusthartford.com. The Hartford, your protection is our passion. The Hartford Insurance Group, Inc. pays royalty fees to AARP for the use of its intellectual property. AARP and its affiliates are not insurers. Savings vary.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rao from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rao will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rao, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
From the Anajar and Levine Accident Attorneys Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Make us the #1 preset on your car radio and on the free new and improved iHeartRadio app. Listen for all your music, radio, and podcasts. Free never sounded so good. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Still got about 17 minutes remaining on this Saturday, April 4th. You're more than welcome to dial in 877-927-6969. Jimothy will line you up. At least I feel pretty good about saying it. How are you, my dude?
I'm doing mighty fine. Give us a call, and I will certainly line you up.
Excellent. Good to see you as always, my friend. Johnny C., that's me, your old buddy, your old pal. Mike Rao is with us. He's the mortgage guy from the mortgage firm. Hello.
Hello.
Oh, hello.
Good morning.
Good
I think
morning.
Jimothy's screening a little too, what would you call that? It's like his, because we haven't any calls come through. He screened everybody out.
Yeah, he screens them out.
Yeah.
Jeez. That's the way he does.
Got to loosen up the whatchamacallits.
Yeah.
Parameter.
The parameters, guidelines.
Yeah, I know. I asked for a name.
Yeah. How dare you, man? A name? I'm not doing that. I'm out of here. Ross Camaronets is with us as well. He's with Brightway Insurance, Juno Beach. How are you, Ross?
I'm doing awesome.
I love to hear
Awesome.
that. Always a pleasure. And Jimmy D's here. That's Jim DePola, who's with the Florida Home Pros team, Keller Williams Innovations. How are you, Jimmy D?
Hey, I'm doing good. It's going to be a busy day. I'm going to be running around all over Palm Beach County to help people buy houses.
That's a beautiful thing. That's a great thing, actually. Good luck with that, by the way.
Thank you.
We're all dependent on you.
Thank you. Yeah.
Most
Everybody's
fingers crossed.
Buyers. Yeah.
So I wanted to go over a little bit about mortgage rates because we really haven't talked about them in a while. So
we were having such a good conversation with the insurance savings and everything. And
now Mike's the one that's going to be coming. Yeah. What was that character on Charlie Brown? Where is it Linus that would just sink his head and like walk away depressed, or was it Charlie Brown?
Charlie.
Oh, okay. Yeah. So Mike's doing the Charlie Brown right now. So interest rates hit I think it's the highest we've been in a couple of years, right, Mike? I've been so busy. I know what the rate is, but I don't know the history of the rate.
We were higher September of 2025.
Oh, it was 2025. Okay.
I'll be way higher tonight at Billy Strings, too.
Yeah. You sure?
So,
Promise.
I mean, I don't want to say rates are that high, but they're are you going to be above 6.46?
Way.
Okay.
Yeah, so we're at 6.46. So we've actually gone about a half a point increase over the last 3-4 weeks ago. Little bit, just a little.
Yeah, I don't
bit
even
less
know
than
what
a
to
half a
attribute
point.
it to. It doesn't. I have no idea.
I have no idea why the interest rates went up. We have no idea. Just a surprise.
It's kind of random bouncing around.
Normal fluctuations in the market.
Yeah. So now the Fed is talking about rate increases. The Fed is now talking about that. There was in the meetings in the last meeting that they had.
Well, they shouldn't have lowered it the last time. I mean,
I
if we're going
agree.
to play, I mean, I don't think
I know,
anybody in this
I
room
know.
agreed with the last push down.
I know.
I did.
Did you?
Well, just because it lowers rates, it's good for business.
It's good for business, yeah. But yeah, they're starting to bring the inflation back into the mix. So I mean, there's only one tool. They only have two things they can do.
Yeah. So we're going to use the hammer, and the hammer is going to not fix the problem. It's just going to break more things. Probably what's going to happen.
I like the where we're doing radio. So Jimothy is here standing in front of like a board where he's got a bunch of sliders on it. So imagine he's got the big board and he's got all this information, but he's only got one slider. He can go up and down.
could do.
He's got the one big slider, but he can do it incrementally.
Yeah.
Not like a hammer blow.
Right. Doesn't just slide it all the way down.
I mean, he could.
Oh,
he
he
could
could
turn it up
if you
to
wanted
11
to.
if you wanted.
Yeah, sure.
So the interest rates aren't optimal. They're not going the way that people wanted. And I don't really know what's going to happen with the interest rates. I'm very confused as to the potential, what's happening right now. Inflation is spiking up, but we had a very good jobs report for the first time in a couple months. I think we increased 178,000 jobs.
I didn't consume that. That's decent
that's
news,
pretty
yeah.
I think that was
healthy.
good March numbers. Yeah. Right?
It was March numbers, and that was pretty healthy. It makes you feel a lot better because remember when they revised everything, they said for the last 12 months we had a net $52,000. Why do I keep saying dollar? 52,000 jobs net loss in the last 12 months for not year over year, for the whole 12 months.
All right. Okay. Yeah.
It was 52,000 net less jobs. So 178,000, that's very healthy. Hopefully it doesn't get revised again down to zero, negative again.
It doesn't feel factual and actual, but it's great. I'm glad to hear it.
Yeah. So that's a hopeful sign.
Yes.
But the interest rates are up, and I do have to bring this up, is that's mortgage delinquencies are up too again. But what you got to remember is that the mortgage rate delinquency rate remains lower than past due rates on other types of debt like auto loans and credit cards. In February, which is the most recent statistic, serious delinquencies for mortgages were 0.32%, and for cars was 0.32% increase, and for houses 0.28%, which I don't think is a big difference between the two. But so we're seeing foreclosure rates going up. As of in January, there are 878,000 home loans that were 90 days late or in foreclosure. Paul Krasker last week said that he is working with 350 clients right now that are in trouble with their mortgages. If you're one of these people that are in trouble with your mortgage, do not do this. Put your head in the hole like you're an ostrich.
Yeah, don't pretend like it's not there.
If you pretend like it's not there, I guess I'm just not going to open up my mailbox this week. I'm not going to open up that letter. I don't want to talk to anybody about this. I don't even want to tell my spouse or significant other that we're in trouble. That I've seen that before. We are experts in helping people that are in trouble with their mortgage. We don't charge you anything. We point you into the right direction of where you want to go. Now, once you get there, there may be costs. Like if you decide you're going to save the house and you need to do foreclosure defense while you're trying to do a loan mod, banks will give you a loan modification if you're in trouble, but they're way more likely to give you a good loan mod when you start getting in trouble or right before you get in trouble. Like if you know, oh my gosh, my May payment, I don't think I'm making it right now. That's the time that you call us and start talking about your waterfall. What is a waterfall? We have a plan of a bunch of different things that you could do in order to either save the house or sell the house and not lose the equity in your home. There's a lot of people out right now that are not able to make their mortgage payment, but they have a lot of equity in your home. And if you miss a mortgage payment, you can't touch that equity for probably a year, right, Mike? Like if you say, oh, I've got $150,000 in my equity in my house, I'll just tap into that. But you missed a mortgage payment. It was more than 30 days late. Right. What happens when you go to get that money out of the house?
Yes, I would say in general, any mortgage late in the last 12 months is going to be a problem for you to be able to get approved for a new mortgage, right? So some sort of refinance or some sort of home equity loan or something like that, if you have any lates. And so you had mentioned like your statistic was based on people who were 90 days late. So that means they've missed 3 months of payments, which is typically when your foreclosure kind of legal process starts. The late that we're talking about is a 30-day late. So your mortgage payment is due on the first of the month. If you haven't paid it by the end of the month, it's going to report a 30-day late. That's really going to hit your credit hard, but it also is going to be, it's like 1 30-day late is not there's some nuance in there, but essentially you don't want that. You don't want that. So before you even get to that first 30-day late, number one, you need to call your servicer and say, hey, we've got an issue. Let's put us on something where you're not reporting the late, right? So you put you on some sort of forbearance, usually it's like a 90-day financial difficulty situation. So you can kind of get that, but that's really when you're going to have to pull your head out of the sand and say, what are we going to do? Because the minute you start going late and you haven't not able to do modification, whatever it is, you're tapping into your equity position. So you have to kind of make those hard decisions. And it's a small percentage, like what'd you say, like less than 0.5%?
Yeah, less than 0.5%
loans out there. So
yeah. So
we're actually one of the quotes we're working on right now is somebody's buying a home in foreclosure. So that's one of the questions on an insurance application is this sale as a result of a foreclosure?
That's really interesting.
It is interesting.
So we're almost at to normal levels. We're almost at 3% foreclosure rate in South Florida area. Normal is 1 to 3%. So now we're at the actual upper end of the normal rate. We were as low as 0.0035 or something, like crazy number low after COVID and everything. And we had that boom. Everybody had so much equity and people were pretty employed. We didn't really have those problems, but now we're up to the upper limit or normal. And I expect that over the next 6 months, we're going to be past the normal limit. But you got to remember that during the foreclosure crisis, the last foreclosure crisis we had, not the COVID, but we're talking about 05 through 013 or whatever, 06 through 013. I think I said before 6 out of 10 homes were short sales and foreclosures on the market, but I think it was really 40%. I think it was 4 out of 10 homes were in some stage of foreclosure crisis when they were being sold. It was a huge number. So 3%, to put in perspective, is not a calamity. 3% is expected in a normal market, but we are going to start scooting out. So those few people that are in trouble right now, please don't sit around. Call us. We're not. Don't be embarrassed to call us. I've shared my story how I got in trouble during the dirty mortgage crash back in the day, and I got in trouble and I did all the wrong things, and that's how this radio show started. Was that kind of. So the thing is, we have the answers you need and the people you need to be talking to in order to get the help you need. But the earlier you start, the better your results are usually going to be. And talk to your bank. A lot of people used to say back in the day, remember this, Johnny? They say, don't call the bank, call us, and blah, 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 blah.
Right.
And that's crazy town. You pick up the phone, you call the bank. Hey, I think I'm going to have a problem with my mortgage payment in May. What can we do in order to solve this problem? And they will probably work with you because banks do not want you to go into foreclosure. It costs them money too. It isn't that you just lose money. Believe it or not, the banks lose money too. So they want to work with you if you want to work with them. It's the ones that stick the head in the hole and are just losing all their sleep at night, and they can't sleep, and they're walking around thinking nothing's getting better, and it's just getting worse and worse and worse. Don't live like that. You don't have to. We're here to help you. And any situation, we're here to try to figure out what's the best option for you, not what is best for Mike or for me or the law office of Paul A. Krasker, if that's what you need. It isn't about that. It's like whatever we could do that's best for you. And we've saved many, 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 many people from this show from foreclosure. We help people sell the house and not lose their shirt when they were upside down. But here's the thing in today's market. Most people are not upside down. And to lose all that equity that you spent all that time paying off your mortgage, prices, value increasing in your house, which is helping. And you've done all this right stuff, and now you're in a little bit of a jam. Don't lose everything that you've spent your money on trying to build just because you're too afraid to pick up the phone. So what you don't want to do is pick up the phone to just an attorney that wants to do foreclosure defense, or just a realtor that wants to sell your house so that you can get the cash. You want to know what all your options are. Talk to the attorney, talk to the realtor, talk to the mortgage companies. Figure out everything at one time. So I just wanted to go over that. Don't want to spend too much more time.
I think that's valuable information because, again, the options is where you're best to sit down and determine what your outcome is. If there's only one option, you go to a bankruptcy attorney, he's going to push you into bankruptcy. Go to a team of pros with all the options that are available. And the reality is all the options might not be options for you if you find yourself in this position. But knowing what your options are, that's the real power. FloridaTalkRealEstate.com. FloridaTalkRealEstate.com.
We've only got 3 minutes.
That's it.
Holy moly. I wanted to ask.
End the show on a high note.
Lifetime for some people.
We're doing it twice.
Just so you know.
I'm sorry?
That could be a lifetime for some people.
I had 8 questions I wanted to ask Mike about ways to make homes more affordable when you're buying them.
Let's see if he can do it. See if he can do it.
Go.
Come on.
You got 8 questions.
Super
That means
rapid
he's
fire.
got 20
okay,
seconds
so
to
say
answer.
yes or no. Okay, we'll do 8 questions, yes or no, Mike. Consider an adjustable rate mortgage.
No.
Hunt for rate buy downs.
Yes.
Put less money down.
Pass.
That's a good one. I like that, Ross. Huh?
No.
Learn how new government insurance rules may help affordability.
Yes.
Find out if family can help.
Yes.
Consider multi-generational homes.
Yes.
Explore alternative housing.
No.
I don't even know what that means. Negotiate the list price.
No.
Yes. That'll help find out. I know you're joking. Yeah. Improve your credit score. That's the last one. Oh, wait. I have one more. I think one more. Rethink your mortgage rate perspective.
Sure.
Have a new attitude about your mortgage.
Yeah.
I actually love my mortgage.
Listen,
I don't really hate my mortgage. I love my mortgage.
Technically, the 6.46. We've been at there. We've been in that zone for like 2 years now.
I know.
2.5.
I know. It really isn't that. I mean,
Yeah.
it's depressing that we went up half a point, but we're in that range of the high and low for the last 18 months.
If you've been an active shopper in the last 3 or 4 weeks, you haven't been happy, right? 'Cause
Yeah.
You're kind of like thinking about where you're going to land on payment, the interest rate, and when you see like half a point over a 3 or 4 week period, that's a
depressing.
little disheartening.
Yeah.
It is, yeah. But if you're working with Mike and your home happens to be in the right zone,
we got some
Smart Start can help with that interest
absolutely.
rate.
Absolutely.
It can. Yes, it can.
Take advantage of everything out there. How about that
And
as an
higher
overall?
interest rate, less competition, better deals when you're going out to buy. So you
Also
might be
that.
able to offset
Also
that.
that.
Yeah. The reality is don't let that number scare you away. When it's right for you and your family, it's right for you and your family. And yes, that rate is an important number, but it's one number. It's one part of the equation. The ultimate number that matters most is what's my monthly obligation, and that's understanding everything, right? Even how the taxes reset. It's why you got to go to people that are great at what they do, not just good at what they do, great at what they do. Know exactly what you're getting into at every step. FloridaTalkRealEstate.com is a team of pros. These are experts in their field. Yeah, we have fun on the radio, but you hear how awesome these people are at what they do. Get all the above. Get the great people, the expertise, a couple laughs here and there. We might even cry together sometimes. Jim might cry if you get your keys.
I wasn't crying. You were
touch
crying.
them this right. It's a great team, y'all. We're here every Saturday for a reason because, man, it's about making right for the community. These people love to do right by you. And yes, they're in it for business, but the business always comes when you do right by people. FloridaTalkRealEstate.com is built on that. Know it, use it, love it, share it on Facebook, on YouTube. Thanks for being with us on a Saturday. Mike Rao, mortgage guy from the mortgage firm. Have a great weekend.
Yeah, happy holiday weekend to everybody.
You
Holiday
too.
week, holiday weekend.
Ross Camaronet's with Brightway Insurance, Juno Beach. Have an excellent weekend.
I'm going to do my best.
Please do. Jimmy D, I know you're busy, but have an excellent weekend.
I will. Happy South Florida, everybody.
Jimothy, thanks for everything always.
Thank you. Happy Easter and have a great weekend, gentlemen.
I saw Dom walking around over here. That means Greeks in the house are going to squeeze out a sports show. We'll be back next Saturday at Florida Talk Real Estate right here for 2 hours of infotainment. It's real radio.